Hello and welcome to another edition of Stockwatch. So as we get into the back end of the trading week, we're hearing a lot of noise coming out of the earnings season reports so far. And yesterday's report with Goldman Sachs and JP Morgan Chase was quite significant as both companies beat earning profit estimates yesterday. JP Morgan posted their first quarter profit of $4.50 a share and their revenue of over 33 billion, and this exceeded just the estimates, which was just over $30 billion as well. And this is mainly driven by the firm's trading operations, which produced about 1.8 billion more revenue than analysts had expected. And moving on to Goldman Sachs, they blew past analyst estimates and actually recorded very high profits with their first quarter net profits and revenues, and this was based on strong performances from the firm's investment banking and trading business. So the bank's their earnings per share was $18.60, and this actually crushed the $10.22 estimate of analysts. So very significant for Goldman Sachs, beating on records as well. But the most significant is, you have to cast your mind back to when profits were down on the first wave of the pandemic in 2020, well, last year. And, JP Morgan's release of 5.2 billion in reserves is the biggest sign yet that the US banking industry in general is now expected to have fewer loan losses than it did last year when it set aside tens of billions for defaults anticipated from the coronavirus pandemic. So you have to just wonder that a lot of the big American banks, as we go into the earnings season and more reports are released, they're obviously gearing up for a post-pandemic life, and going into 2021 and obviously 2022 when most of the global population should be vaccinated by then. Will this be a big turnaround for not just the banking sector but for all sectors in general? So I just want to take a look at JP Morgan first. The last time I looked at them, I was looking at these peaks and troughs that we saw previously, so because we saw quite a big accentuation in the middle of March, but now we're seeing prices consolidate and just a little bit to the downside. As you can see here, we're precariously hovering just above the Ichimoku cloud, and this is quite a strong sign that we could actually start seeing a little bit more of a downturn in profits, in price action. So if we do start moving downwards, we could enter the cloud and actually start pinging this last peak, which is roughly about the lower end of the $140 range. And then if that happens, then I'll be looking to have a nice sell position running into probably about the $130 region. I'm not seeing too much in the way of divergences. I was waiting for momentum to start waning even further here to give me some kind of hidden bullish divergence, but we'll have to wait and see and wait for more clues on the RSI and momentum indicators just to see what the possibilities are in the next few trading sessions, and probably as we go into next week as well, because obviously, as I said before, a lot of companies and banks are projecting that there's going to be a big turnaround in their profit scheme for 2021 when supposedly the global trade and everything else gets back online. But if there is a third wave of the pandemic, then we'll have to wait and see what that means for stock prices. And Goldman Sachs as well, we're looking at the same kind of patterns for most of the banks, and as you can see here, we're hovering quite close to the Ichimoku cloud, and if we touch that top border, then the price actions should start waning and moving lower. So again, I'll be looking at these recent peaks and troughs just roughly around the $310 mark, and then again a sell position into the next region, which is roughly about the $270. On RSI, I'm seeing just slightly a potential divergence, but it hasn't fully formed yet. So I'm just again waiting for more clues on the RSI just to give me a bit more of a direction of the price action as we go into the trading week. Just want to bring Goldman Sachs down on the 4-hour chart, because on the intraday, we're just seeing now that the prices are actually engulfed in the cloud. So now I'm just waiting for a bit of a breakout to the upside or downside. I'm expecting it to come back down, like I said on the daily chart, probably to this, because this is going to be the next couple of trading days as well. So we could see a bit more of flat momentum. As you can see here, there was a previous bearish divergence on the RSI. So we could see that start coming into play. It is a few days old, but it can actually weigh in on prices if we get a hidden and a standard divergence, or the other way around, it could lead to a trend reversal. So you just have to look out for these things on the RSIs or any oscillators that you're using, and just to make sure that you're not getting surprised by any of your trades if you have them open. So just a few things to look out for as we roll into the earnings season, and obviously when markets can be affected and the sectors that can be affected as well. So that's all from the Stock Watch today. Thank you very much for joining me. If you have any comments or questions, please feel free to add them to the post, and I'll get back to you as soon as possible. Have a great trading day ahead, and bye for now.